Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It's the 4th day of December, 2015, and this is the Daily Report for Gold and Silver, our weekend review. And what a way to end this week. Tremendous rally in the market, currently trading up almost $24 on the day, 1085 and change. We've seen it trade to a low of 1058 and a high of 1088. So we're just a couple of dollars off of the highs today, trading up 2.2% higher on the day. And as I said, dramatic breakout. Now, the one thing that we can see that to me stands out more than anything else is the difference between how the market traded yesterday with a $10 gain as opposed to how it's trading today with a $23 gain. Because yesterday, the $10 gain wasn't due to buying. In fact, we had prevalent selling in the market, taking gold prices down about $11 on the day. But the dollar, which was so tremendously weak, added $22 in value. Today, it's completely different. We have a slightly stronger dollar, and what that is doing is actually adding a little bit of fuel, about $4.50 in terms of a negative headwind, but $25 to $30 are in buying, so we're more than compensating for any kind of dollar strength. Now, in fact, let's go ahead and take a look at the dollar right now. You can see we talked about that tremendous downside move we saw yesterday. That's this candle here, and you can see that it is recouping. This is really what's called a bullish harami in terms of a candlestick pattern. Euro on the bottom, and you can see that the euro is softening in today's trading activity. So traders, what can we make of this most recent rally? A significant rally this week, no doubt about that. But does that mean that we're actually witnessing some sort of a major key reversal? My sense is that we probably are not. We talked about this a little bit throughout the week, but do want to take a look at it very, very briefly. And that is the overall characteristic in the market is that it'll come in, it'll make a higher high, and then from that higher high, it'll come in and make a new low. We get that right here. However, following that, the next rally takes us to a lower high. So we can't say that we're in any kind of a bull mode. We'd need to see a higher high. And at the same time, when we get the correction is above the previous low. So it is actually a market which is compressing. And so what we get then is another series of highs that are lower than the prior high, and then a low that is a new low. So again, now we've got these markets which have rallied to a high, but that high again is below the previous high, and yet again we make a new low. So what that tells me is that if we continue with this characteristic, we will probably see this market begin to trade higher. However, and we talked about this a little bit the other day, my sense was we would see this market go anywhere between 1080 and roughly 11 to 1103. And that's based upon these two marks here, the 61% retracement and the 78% retracement. And that retracement is a fairly simple move from these highs up at 1191 to this new low here. And so when we do that, we've actually crossed through the first level. My sense is that we might take a stab, see this market trade as high as possibly even 1100, and that's going to be our moment or position when we will actually recommend initiating a short position. The reason that I held off from buying on this rally, and I will tell you, today took me by surprise. Yesterday, it was quite obvious what we were witnessing. We were witnessing a dollar that was being devastated. There was selling in the market in terms of the precious metals, but of course, they ended out on the positive side due to a weak dollar. Today, you've got virtually all buying coming into the market. And I think what we're seeing is really a very, very strong case for a massive short covering in the market. There's probably some bargain hunting. There's probably some initiation of positions, but I would venture to say that for the most part, what we are seeing today is a massive round of short covering. So my sense is that We'll see how the market trades, but as I said, I would expect it to possibly go as high as, say, 1103, and at that point, we're going to want to implement a short, because my sense is what we will see at that point is the market recoups. We get our rally. The rally takes us to a high that is lower than the previous high, and then we'll come in and probably trade sideways and then make a new low. There's no doubt, I think, that the likelihood of a rate hike coming in the next couple of weeks is absolutely imminent. And what we're seeing is really the markets factoring in that inevitability. Now, one thing that I did do today is when I sent out my special trade alert on the Standard & Poor's 500, which is through Trending Markets, I included that for all of our subscribers because I felt that I owed you at least a couple of good trades. We've been just knocking it out of the park in terms of trading the Standard & Poor's 500. Dow Jones Industrial Average up 361 points. To give you an idea of what kind of profits we saw in this one particular trade, and it's hard to even fathom, but we went in at about 20.53, 20.54, 30 points from here at $250 a point. Tremendous move to the upside, and hopefully many of you took advantage of that move today. So traders, in my opinion, next week is going to be an absolutely pivotal week. We had a substantial bottom in the market that was hit and that was overcome, meaning we're now trading $30, $35 off of that low. Technical indicators are also solid to the upside. MACD on this daily chart, Japanese average format, Henkinashi, and you can absolutely see this blue linear line down here and up here. What that represents is the space or distance between the two moving averages. And when you see it go from negative to positive, of course, you're actually getting across of the two moving average lines. So we do have a market that has been extremely oversold, under pressure for a protracted period of time, now coming off the lows. My sense is until proven otherwise, I'm looking at this as a potential trap in the market as opposed to a full-blown rally. But anything is possible in these markets. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.